Are you invested in PSU banks? If not, you must be sulking because these stocks have done really well in the last 1 month. Picture this. Look at each of these names and you will see that in the last 1 month, in the month of October especially, these stocks have rallied anywhere between 6% to even as high as 30%. That's a really strong rally. Now, why could this be happening, right? That's the key question that everybody is asking. What's working for these stocks, the PSU banks that is? The tier 1 capital is near all-time highs. Who would have thought? Headline gross NPAs and the net NPAs are the lowest in the last 7 years. The biggest bugbear for PSU banks is the asset quality. And right now, their gross and the net NPAs are the lowest in the last 7 years. That tells you a story or two. M&A issues largely resolved because there is now proof of the pudding because the government has done these M&As and therefore those issues are behind us. And a lot of people say there are not too many large sectors which might compound problems on the asset quality for PSU banks. Now, I'm not quite sure of that, but well, you can argue that on the headline basis, it does look plausible. The question is, can the less believed things happen? Can PSU bank ROAs move up to 0.6 to 0.8%? Remember, they reported 5 consecutive years of negative ROAs up to FY20, and and therefore this 0.6 to 0.8 number looks slightly optimistic. But if they manage to do that, that's a great thing. Can these companies consistently maintain their asset quality? A point that I was making earlier. And can PSB stem the market share loss that they have always been plagued with? Well, even if they can maintain the market share, that would be a big battle won. Is there valuation comfort though after the run-up that has already happened? That's the key question. Now, again, if you look at all the valuation tables, because of the run-up that has happened, most of the stocks are now trading at par with their averages over the last 5 years. But of course, the averages were in a period when they were plagued with issues. So you could argue that the current multiples could be a bit higher. In case of SBI, which is arguably the best PSU bank, the valuations are already higher than the 5-year averages. But the question is that the valuations are not very demanding. Even if it is not too cheap, the valuation for each of these banks are not very demanding, which is the big thing. The key risks, of course, they are not very digitally savvy. If there is a steep rise in yields, then it's a problem. If there is very steep growth, then people believe they might again start seeing NPA creation. So all of those are issues. But net, you have to argue that they have turned the corner and investors are betting on them, because of which they have played this catch up very well. Mihir Vora of Max Life, for example, says that the run-up that has happened is because of the valuation catch up. He, however, does not believe that this is investable. And if one wants to invest in the long term, Mihir is of the opinion that one should stick with the private banks. Let's see if the catch up or a fresh up move continues in these stocks.